Well, the answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock. The test about whether to pay dividends is whether you can continue to create more than $1 of value for every dollar you retain. And there are many business. Take See's Candy, which we own. See's Candy has paid everything virtually out to us that they've earned because they do not have the ability within See's Candy to use large sums, which they earn, intelligently in their business. So it would be an enormous mistake for See's Candy to retain money. So they distributed Berkshire, and we hope that we move that around in some other area where that dollar becomes worth $1.10 or $1.20 in terms of present value.
Hello everyone, and welcome to the Nick Finance Clips channel. Okay, now in this video I'll be talking about 3 ETFs, dividend ETFs, that you should be looking at this time. It's clear that the market has been in a turmoil. The S&P 500 is down about 9%. The performance of the Nasdaq is also down about 14%, and the Dow is down about 7.63%. So this tells us that there just might be a need to revisit our portfolio allocation, all right? And that's why I'm doing this video. And for those that are new to the channel, on this channel I basically talk about principles following Warren Buffett, Charlie Munger, and value investing. I also love to look at safe investments in terms of ETFs that allow you to sleep better at night without having to track individual stock performances. If that sounds like something good to you, hit the like button, subscribe to the channel, and enjoy the content that I put out on this channel. Now, with that being said, let's get into the first ETF on our list today, which is the Vanguard Dividend Appreciation ETF. Okay, now this ETF has a 1.68% dividend yield, which in the current regime is not bad at all, being that you can always pick up this dividend while the market remains volatile. Bear in mind also that this ETF has returned 175.57% over the last 10 years. And in fact, the last 5-year performance is also pretty impressive at 74%. One of the beauties about investing in ETFs is their low cost, which in this case is 0.06% for this particular ETF. Now, it's not enough to just have a low cost dividend ETF. You also want to check how the ETF has performed over the last 5 years in terms of growing that dividends. And it's sweet to see that over the last 5 years, this ETF has grown its dividends by a whopping 7.82%, which is pretty impressive. All right. Another point to note is that this ETF pays dividend on a quarterly basis, so you could readily see those quarterly paychecks coming in despite how the market performs. All right. Now, on the final note, it's always best to look at how this ETF is broken down in terms of the companies that are invested. All right. Now, you see financial services accounting for 17.58%, industrial 16.14%, and technology 15.7%. Now, the companies in this list are companies that pay a healthy dividend. Companies like Microsoft, Johnson & Johnson, United Health, JP Morgan, Home Depot, Visa, Pepsi, and the likes of those companies. So we're seeing companies that have had a very stellar dividend history in terms of being aristocrats being in this ETF. A final note about this ETF is the $62.58 billion under management, which is quite a large asset pool for investors looking to expose themselves to some sort of a safe dividend. All right. Now, with that being said, the second ETF on the list is again from Vanguard, and it's called the Vanguard High Dividend Yield ETF. Now, when you check the previous ETF, the yield sits at 1.68%, but this ETF has an increased or a higher dividend compared to that one at 2.8%. Now, over the last 10 years, the ETF has returned 132.13%, which is also quite good. And over the last 5 years, guys, the ETF has returned 39.84%, which is also not bad, considering how the markets are performing currently and how the market generally performs in terms of downturns. Being a Vanguard ETF, we should not be surprised at the expense ratio at 0.06%, which is also low and would allow you keep a lot of the returns that you earn on this particular ETF. And also tracking the dividend growth history, we'll see a 7.01 5-year growth rate, which is pretty good. So in essence, we're seeing an ETF that is growing its dividends, and the ETF itself is growing in capital appreciation over the last couple of 5 to 10 years, and with a low cost coupled with that also. Now taking a look at the holdings breakdown in this ETF, we will see again financials, consumer defensive, and healthcare taking the bulk of allocation in this ETF. I love these names in terms of like the Johnson & Johnson, JP Morgan, which is the biggest bank in the US, Home Depot, Procter & Gamble, Bank of America Corporation, ExxonMobil, Chevron Corporation. So you can see that diverse spread in terms of companies invested in. And interestingly, all or most of these companies pay some decently high dividend yields and qualify as dividend aristocrats, at least for some of them. So this comes in as number 2 on my top 3 dividend ETFs to buy and hold for retirement. Bear in mind also that this is not financial advice. I'm just sharing my personal opinions with you guys. The third and final ETF in this category is the SCHD, which is the Schwab Strategic Trust Schwab US Dividend Equity ETF. Now this ETF has a 2.9% yield, which is higher than what we saw with the high yield dividend ETF and the dividend appreciation ETF. The ETF has returned a whopping 183% over the last 10 years, and the last 5 years has also been impressive at 71.61%. With an expense ratio of 0.06% also in this ETF, we can also see that this is also a low-cost ETF that would allow investors keep the bulk of their returns. Now, one thing to note about all these expense ratios, guys, is this. Over the short term, it might seem like it doesn't really matter, but when you compound it for 10, 20, 50 years, you will start to see how this really adds up and eats up the gains if it's too high. So I like to go for ETFs that have fairly low expense ratios, which this particular ETF qualifies. Again, looking at the holding breakdown of this ETF, financials, industrials, and technology come out top in terms of allocation, with names like Merck, Coca-Cola, Amgen, Verizon, Pepsi topping the list in terms of exposure to this ETF. So by and large, this is an ETF that has 31.7 billion under management, which is less than what we see with the Vanguard ETFs, but the yield at 2.9% is something that is quite interesting and is pushing me to talk about this ETF. On a final note, guys, this channel talks about different types of ETFs. I'm not against individual stock picking, but that's not the focus on this channel. Let me know in the comment section which other ETFs you would like me to explore over and beyond these 3 dividend ETFs that we have just spoken about on this channel. With that said, I hope you're keeping safe. I hope you're psychologically prepared for whatever the market brings. Thank you for watching, and please continue to invest safely and think of the long term. And before we go off, in case you forgot, please hit the like button, subscribe to the channel, and join us on our journey to financial freedom, learning from Warren Buffett and other guys that have gone before us. With that being said, thanks so much for watching, and see you all again in the next video. Cheers.